Vishnu Varathan, well, what are you seeing here that, well, others are not?
Good morning, Rishaad. Well, to start with, Malaysia's inflation probably has not jumped as much as some of its peers has, but that does not quite change the fact that inflation is a pressing problem for Malaysia as well. I mean, for starters, they've got generous subsidies that actually depress headline inflation. Besides, core inflation and particularly signs of demand pull inflation is increasing. And as you rightly pointed out earlier, policy rates are well below their pre-crisis levels. Our own in-house monetary conditions index show that Malaysia, as an early start, tightened monetary conditions last year. But that has kind of slipped off, and now Malaysia has to restart and resume that process. And arguably they already have. At the last meeting, they upped the reserve ratio, and their statement was also notably more hawkish. I think it is very notable that they omitted that rates are appropriate where they are now. So that statement is very telling. And in all, I think in all essence, it makes sense for BNM to move preemptively. So a 25 basis point move today would add a lot to credibility and would reinstate its, its position in inflation fighting as well.
Yeah, I mean, inflation fighting is all, this is what it's about. Philippine data as well showing this acceleration in price rises as well. It does continue to be a big weight on equity markets this week and generally on sentiment too. What do you make of it all? Because many people are saying as we move towards the second half of the year, we'll see inflation peak.
That is still pretty much our view as well. We also look at inflation peaking, but then one could argue path dependency. So the kind of choices that policymakers make now would in fact end up determining how far demand pull inflation is allowed to get. And very often we think of growth and inflation as two separate issues, but they are inextricably intertwined. So getting inflation down is part of policy's way of keeping stable medium-term growth intact. Equity markets are, of course, reacting adversely now because they are looking beyond the rate hike, high yields to see that inflation could actually be impacting negatively on growth in the end.
Vishnu, though, I mean, I'm just going to play devil's advocate here and say that this inflation picture that we're seeing is partly cyclical, and there's not a lot that these banks can do, or these central banks can do about it, and it'll just come down of its own volition, and on top of that, you won't be damaging growth.
Well, I have to agree and disagree. I agree with you that it is cyclical to some extent, and there's also an externality that's out of their control, which I agree with. But that's looking at it purely from the cost push side of things. But in fact, undoubtedly, inflation on the demand end has also increased. Output gaps have closed up very tightly in the region. In fact, some are going into stretch capacity constraints. And these are things that would fan inflation, the demand pull inflation, much further. So central banks have to make a clear stand and have to fight inflation regardless of whether the main driver right now is cost push, because eventually it will lead to inflation expectations becoming unanchored if they don't.
Let's just talk a little bit about what's going on with growth in the region. Let's just focus in, let's say, on Indonesia, because we've got GDP figures out from that country as well, seen as a bit of a tiger now as well, people wanting to include it into various broader markets.
That's true. I mean, Indonesia's growth has been very well supported. Commodities is a large part of that story. So today we I think are expecting growth to be quite strong at 6.7% despite less favorable base effects. In Indonesia's case, inflation in the first quarter also surprised to the downside overall, so that should keep consumption very strong. Investments, of course, is the other strong driver, and we see Indonesia's growth remaining pretty healthy for the year at 6.5%. So in fact, in our list of Asian countries, Indonesia is the only country for which we are projecting higher growth this year compared to last year. So that's going to be very stable growth, driven primarily by commodities. But in the medium term, of course, Indonesia has to press forward with a lot of reforms and also build up hugely on infrastructure to grow its manufacturing sector as a hedge as well. So they can't continue to rely on the same drivers of growth for too long.
Vishnu, very quickly as well, from Indonesia to India, what about the huge rate hike that they instituted the day before yesterday? Did it surprise you? Because I mean, I think there was only one set of economists that we talked to that had predicted it.
You're right. I mean, they did up the ante very clearly, and the policy statement also showed that very clearly. We were toying with the idea of 50 basis point hikes. It's a close call, but we were looking for gradual rate hikes to keep, to be the theme of the day. However, I think RBI has probably made the right move. They have moved forward with a more aggressive rate hike, and they'll probably continue to rate hikes further. We're looking at 8% repo rate by the end of this year. So that should help to anchor inflation expectations in India's case.
Vishnu, thanks a lot for that. Vishnu Varathan there, joining us from Singapore. He works at Capital Economics, having a look at the inflationary environment in this part of the world.